Yo, what's up, everybody? So, yeah, let me know if you could hear me okay, if you could see everything okay. Hopefully we don't have any lag. Let me see. So there's a 4-second delay, so keep that in mind. But yeah, let me know in the chat if you could hear me okay. So remember last time, the other day, we had an issue, a little bit of an issue. There's still one in the chat if everything sounds okay, if you can hear everything okay. I don't want to move forward unless I know everything's good. What's up, George? Good morning. Right, okay, everything's good. All right, let me move to a chart. Can you guys see everything clearly? The letters may be a little small. But yeah, just let me know. Maybe turn up my mic a little bit. All right, but you guys can hear everything okay? See everything okay? See if I turn it up. Yeah, there we go. Looks okay on my end. But yeah, because of the issue last time, I definitely want to ask you guys before we get started and, you know, dig into all the stuff that we're going to have to look at today. So we do got news. Okay, yeah, Sin said everything's okay. Okay. If there's a problem that arises, just let me know. Everything is okay except the letters. Ugh. You're talking about these small... The small letters. If I increase the size, does it look better? The thing is, too, if I go 4K, it's going to have a big lag. Well, probably like 10, 11 seconds. It's up to you guys, though. You know what I mean? Like, would that be okay? Would you rather have a little bit bigger of a lag? Because, I mean, we can't get away from it. Not a lag, but a delay. Because streaming, there's obviously delays and whatnot. But would you guys prefer to have higher quality, bigger lag, or easy, like more real time, like 3 to 4 second lag, but you know, 1080p, or a little bit less than a little bit less than 4K. The replay is 4K for sure, as far as I know. But you know, these are some things that we kind of got to deal with when we're streaming. But yeah, it's up to you guys. Let me know. I think the quality is fine. Okay. Quality with this is fine, you say? Okay, so you guys think I should stick with this? Quality, ultra low latency? Or would you prefer... On Sundays, I'll do the 4K high quality live stream. Because the lag doesn't really matter. But this, the lag does matter. Because if we're in the chart calling out a move, and I'm already talking about something that's playing out, but then it comes 10, 15 seconds later, you know, it could be an issue, even if the quality is better. But yeah, Yesin said that the quality is fine. Who's Precious in the chat? What are you in my private group? I can't remember, because I just don't... I'm not piecing together the username. Yeah, let me know in the chat. Precious, what is your actual name? Just first name. Or username in Discord, if you're in my private group. Yeah, I guess I'll take your guys' opinion for now with that. maybe see if there's anything else. If you guys have any information you could send my way, that'd be great. Obviously, streaming and technical issues is not necessarily my forte. Definitely learning though, so. But yeah, we've had a pretty eventful week so far. I'm just a YouTuber who finds this channel. Oh, okay. Okay, for sure. Yeah, maybe on Instagram, right? You could DM me your name, or if you're comfortable with it right now, you could send it in here so I don't have to call you Precious. I mean, if you're cool with it, I'll call you Precious. But yeah, appreciate you guys' support. But yeah, so again, we have news in 2 minutes. It's gonna be pretty dynamic. Well, 1 minute now. So we just get a rough view of things fairly quickly. It looks like price is just definitely racing to the buy side. We're in a premium. We broke through 50% of the range in here. So it's not necessarily looking like it wants to go lower yet, if it wants to go lower. So we're just going to assume that this was the manipulation, right? The little manipulation closed in the gap in there, and now it's raging to the buy side. If we are going to go bearish, we're going to have to get through all of this and go down below that, and then we could target the low. But otherwise, we may end up looking to go to the buy side if the DXY does overtake this fair value gap. So we got to watch how the DXY is going to treat this. Are we going to leave a low like this and then run it one more time? Is this low here going to act as this low and then displace to the buy side? We're going to have to wait and see. We're still pre-market. We're not necessarily in the open yet. So all of this could be looked at as manipulation potentially. We do see the currencies are rallying now. So the news just came out. DXY is applying interest to the downside. We do got the bonds here. They look like they are running to the buy side. So that's favored by lower yields, right? Getting back down below these levels like we talked about. If it does get down below that, it's going to continue. And we'll probably see this dive a little deeper, maybe even eventually get down to here. But we have this low we have to target first, and all these previous days lows within the previous week's candles in here. This previous week low, weekly low, weekly low, weekly low. We got the wicks in here too. So those can all be looked at as targets if price does want to reach down into that. If this goes lower, DXY is being pushed lower, indices are being pushed higher, currencies are being pushed higher. If this goes higher, the same thing's taking place. Just heavily supporting that idea. So, I wanted to see if we could break down below this here and stay below this wick. I said my line in the sand, essentially, for us to see these currencies go lower is going to be, keeping price below this. It's a breaker. It's a bearish order block. Down wick. Daily fair value gap. I wanted to see if that could invert or be reclaimed, and then try to target the equal lows that we have labeled here from, or was it equal lows? Let me see. Whoa, wait a minute. Yeah, let's see. That's a quarterly order block, 50%. Okay. So yeah, then we had that low. So if we look at this wick here, we're pretty much closing above the 50% of that. And it looks like price is continuing to want to attempt at least to get back up to the buy side. So, we got relative equal highs here. I did mention that on Sunday. So we'll have to see if that's potentially the target. That completely turns my interest off, at least near term for shorts. Would probably result in the DXY declining, or it should if it's going to support that, if correlation is intact. And then of course we got, let's go to these upper time frames. We got this reaching into this daily fair value gap. So I'd prefer to see us break above this in here. We do got S&T, right? Not necessarily there, but we do have it with this low and this low, right? So this aligns right here. This low aligns with this one. So that's S&T. So if we get that S&T to continue and we see displacement that gets above this daily fair value gap, an early sign would be us getting above this one in a pretty fast-paced manner. If we do get up above those levels, these highs and the trendline liquidity associated becomes a risk of being targeted, right? So we got to see how this is going to behave in here. If the DXY continues to tank and we don't get a response here to the buy side, if we overtake this, again, we're starting to build the narrative to turn and go the other way. So that is with the currencies, DXY, the bonds and yields. At least for now, they're dumping the yields, and the bonds are looking like they still want to continue. Going to the buy side, targeting the highs up here, which I said is a target if we don't blow these lows out, if we don't stay below this fair value gap. And again, that's positive for buy side delivery in the indices, and downside in the DXY, higher in the foreign currencies, right? So again, we carry that information over to these assets, right, the indices. And again, we go from this high to that low. We've really blasted through that, right? We were on a live in my private group yesterday, and we basically were looking to see how it was going to treat that. We did engage a buy. And so now, are we going to try to take these relative equal lows out? Is it going to run up here, sweep that out, and then continue to go higher? We have hit this daily fair value gap level. If we go over here, zoom out, get rid of some of the massive amount of price delivery, and we could see that we're basically pulling up into that. We do have this wick here. We did see the response from this daily order block, and basically just tugged lower. We had one change in state, a second change in state, and then that continued to confirm that we were going to dig lower. Ended up fully targeting our previous week's low. Again, the down movement here, up movement, and then the breakdown that got below. We see that we have a breaker there, and we were watching to see how sensitive that was going to be, if it was going to be sensitive, and try to continue to push this lower. But for now, it seems that we've had an SMT here, right? The Dow made a higher low, and then the Nasdaq and the S&P made a lower low. So we got to keep that in mind. And if we get this, well, we've kind of got above this a little bit, so we definitely want to see how it behaves with that. But right now we're kind of in a back and forth delivery. It has definitely swept the lows and accelerated, and basically broke through the order block that I wanted to study and see if it was going to be sensitive. Because if it was, we would have been able to continue to, trade into it and then trade out of it. But, at the moment, we're above this gap down here. It's new week opening gap. And we're basically in a mode of trying to see what DXY's response is going to be from below this low, right? Inside this fair value gap. Is it going to be used and get us up above this previous week's new day opening gap that's clearly been used and clearly is significant? Or is it going to break down below that and then basically try to, target the sell side? For now, given what we see here, we're going to assume, at least for the DXY, that it should be able to respect this. And we also have buy side targets up here. We have this. We have a daily bearish order block here. Then we have a high up here, and then we have the further high up here as well. So as long as we stay above this high to that low's equilibrium point, and we stay above this daily fair value gap, the narrative is still bullish, right? Just overall with the information that we have, it's still bullish, okay? And again, if that happens to continue, we may see all these deep retracements continue to do what they've been doing. Right, so it's at the end of the month as well. I do want to mention that. So we're basically capping the monthly range at the moment. We got, November? We got the open price up here. It basically rallied up above the monthly open, and then we've just been bearish. And then we hit an opposing PD array, and that opposing PD array here set price off with an SMT as well at the end of the month. Just like at the end of the week, there's a cap of the weekly range. it's the same thing that's happening on the monthly time frame, right? So yeah, it's pretty much what we're seeing so far. It's kind of my thoughts. We definitely want to look at session liquidity, right? We'll get into that. Let me see. See the chat. Right, no questions. So yeah, we definitely want to see what the response is going to be from here, because we are hitting that higher time frame level. So if we take that information, we go to say the 15-minute, we have rallied up. If it's going to be bearish, this is actually what we want to see. It kind of blew past a little deeper than I would appreciate. We're in like a very deep premium relative to this high and that low. We're in the extreme premium relative to that high and that low. Okay, so we'll kind of see how it wants to treat these equal lows here. I wouldn't be surprised if it is going to go higher, if it sweeps that and then gives us a pretty hard shift back to the buy side. That would be pretty convincing, and especially if we get up above this potentially, right, if it reacts that way and we get above this high and with displacement and DXY, if we could see a decline, we could then look at this as a second stage distribution portion within this price swing, because we'll have the smart money reversal at a higher time frame PD array. That would end up being the previous week's low. Basically be disrespecting the weekly bearish breaker, and just respecting the structural delivery with the market maker buy model. Plus we have equal highs up here too, so I need a little more evidence, given the fact that higher time frame wise we're not necessarily overwhelmingly convinced. I mean, this is pretty convincing, right? We would have preferred and wanted to anticipate this holding, but because it's dug so deep into it, we're going to have to just watch the response and wait till 6:30. And of course, you want to make sure you're executing in macros. This ain't financial advice. I'm not telling you to take a trade at all today. You should be studying, if I'm being honest. But at the same time, we'll see. We'll see what there is to potentially participate in. And given what we've discovered so far, I personally want to wait. We do have the central bank dealers range in here, right? That central bank dealers range is giving us our standard deviations. So we got 1, 2, 3 standard deviations. Power 3 dynamics, basically when you're using this this range and this projection tactic, we can't go past 3 standard deviations. Preferably we stay within the second. So in all reality, we're still inside of a pretty decent structure to want to go higher. Not much has been really invalidated. If we zoom up a little bit, we do want to grab this fair value gap here. We prefer to see that if it is going to go higher, we don't want to see a deep retracement into this. This should be left open as a breakaway gap, right? Why? Because this whole fair value gap has offered sell side. Now that we've displaced creating buy side delivery where it lacked buy side delivery on the left side, on the sell side idea, that should now be balanced. And then as it keeps printing like this, it's going to retrace a little bit, right? Here and there. But if it's going to be a market maker buy model, if this is going to in fact end up being a bullish order block, and if this is going to continue to hold price and keep us going to the buy side, this delivery here should continue to basically create balanced price range or pieces of the balanced price range as we get up to the high. So it's all being created here, right? Balanced price range was relevant right here, assuming that it was gonna go higher, right? And then as it prints, it's creating balanced price ranges. So it should see a shallow retracement, if anything, right? If it is gonna, give a retracement at all, right? I prefer that it continues to sweep lows and then aggressively move to the buy side if that's going to be the case. Otherwise, we haven't fully disrespected the line in the sand, which would be up here. That would overall change the state of delivery, because this would end up being a bullish order block if we get up above this high, right? Or simply close a bit more convincingly above the open here. So yeah, I want to make sure I mark that out. So yeah, does everything make sense so far? Just let me know in the chat. Again, I appreciate y'all hopping on. If you get value from the content, don't forget to like the video, subscribe to the channel. It helps push the channel out more. So yeah, but let me know if you guys have any questions so far, if everything makes sense. Perfect. Okay. Appreciate you, Yasin. Okay, George, makes sense. Okay, perfect. So yeah, we're approaching the first macro. Let me actually remove this. Didn't mean to leave it. So I can say too, if we do break down below like these levels here, and we get deep into this, we may see this overall delivery higher to target the low turn from a possible market maker buy model delivering to the buy side. It would turn from that to a failed market maker buy model because we couldn't get above this high, a failed, breaker or a failed change in state of delivery confirmation from that higher time frame, to then shift into market maker sell model ideas. And that's of course within the higher time frame, potential bearish continued movement within the breaker candle here. We also have that wick there too, right? We also got a monthly wick there. Let me go pull that up. Wait, what the hell? Wait, what? So yeah, that, I guess I didn't fix the adjustment on that. Yeah, let's use this here. So grab that wick, we'll grab that wick level. And that's a weekly wick. So yeah, and then we'll kind of observe how it's going to treat that weekly wick. Right, because we're trading back into it essentially. So again, getting below some of these levels is also kind of a helpful tactic, a helpful tool, helpful confirmation that price may continue to drop. If it gets below them, uses them as dynamic resistance, that would be a pretty good sign as well that we're continuing to drop. And the market maker buy model failure based on a displacement inverting these levels, again, it would start to adjust our perspective, especially because we're basically, we're up in a premium, but at the same time, I guess we are pretty much beyond this high and that low's equilibrium. So yeah, we're basically in a really deep premium, right? So it's definitely a high resistance environment. Again, we have a holiday coming up, so Wednesday, Thursday, Friday. Well, Thursday there's going to be no trading whatsoever, because I mean it's gonna essentially stop trading. It's going to be abbreviated. Maybe not, because Veterans Day traded all through the day, which is kind of strange. I'm not sure if that happens all the time, but generally holidays cut the session in half. And there's a holiday gap that's used on the next day generally, right? But day before, day of, day after a holiday, it's just a good rule of thumb in terms of conditional anticipation and awareness that high resistance a lot of times will come around those times. So let's go actually look and see what the rate was. So the forecast was that core retail sales was down. Was it down 6%? Is that what that means? Release date delayed by 40 days due to the shutdown. Actual greater than the forecast is good. So it was not greater. So it's a negative news release for that data. And retail sales. Okay, so it's basically the same. PPI, it's surprising. PPI is generally pretty aggressive. But because there's news later, I think at 7 a.m. Yeah, 7 a.m. They'll probably wait until, like I said, after the open to really give us a pretty dynamic price action, right? Yeah, this here is a 1 hour fair value gap. Right, no questions. All right. So yeah, we'll keep tabs on this. Okay, we got the central bank dealers range. We also got the flow idea. These are just in the Asian range. These are pretty much areas in price that you use for projection, specifically for power 3. Like, where's the low of the day going to form if you're looking at power 3 going lower to go higher? Well, it's within generally a close proximity to one of these standard deviations. You know, same thing with, you know, sell side, right? If it's going to go to the downside, generally it'll try to manipulate up beyond the highs to either 1, 2, or 3 standard deviations. Preferably, we want it below 2 because that's like the healthiest environment you could be in, or the healthiest characteristics you could see that deliver the most clean power 3 ideas. And you know, this here again is the graded price swing. So 75%, we could see how 50% was used. Kind of used it as, you know, an anchor point, right, for a move. Well, not an anchor point, but I guess dynamic support level. You look at the 25%, which is right there. You could see how that was used too. If you were assuming the price was going to go to the buy side, right? Like, if you can identify the sell side of a market maker buy model, you want to measure out that sell side high to low, and then you get these 25, 50, 75% quadrants, and then every time price, you know, is close to those, you know, you want to anticipate potential activity happening that may be pretty dynamic, like you see here. You know, and sometimes it hangs around, right? It's not always going to be, you know, super dynamic. It may take a little while, but eventually, if you are correct about where it's going, there are really important levels to pay attention to. ICT teaches about graded price swings in his 2016 stuff. I mean, there's a lot of people talking about it nowadays, but yeah, it's one of those things. So definitely look into it. So good morning, Joan. Appreciate you hopping on. It's a freaking chapstick, bro. Sheesh. This freaking weather change messing with me, bro. But yeah, how's everything been for you guys? Let me know in the chat. You guys been doing okay? Haven't been blowing accounts, hopefully. So yeah, we see the DXY is really respecting this. It's pretty heavy right now. Yeah, so we got the 50%, this level in here. And this weekly wick in here, we zoom out real quick. It's this wick right here. So we're trading into that. And whenever there's a wick that we're trading into like that, we definitely want to make sure we're looking at it like a discount array. And if it doesn't get treated as a discount array like this one did here, like you can see, this is what you can expect. If order flow is bullish, down close candles supporting price, fair value gaps being respected, up wicks or even down wicks if they're being traded into, like maybe like this one right here. If it gets traded into, the 50% should respect it, right? And then it should continue to go in that direction you're aiming at. So yeah, we could see how Friday's low was used, right? Remember, every time we start a week, Friday's high, Friday's low. We always look at it because it's going to be the closest liquidity. It's going to be targeted. As you could see, before it even got to, you know, anything down here, anything up here, or any of these deeper levels in here, Friday's low was looked at. And then if price is going to reach to these upper levels for DXY, it's going to have to get above what? Friday's high. It's also going to have to get above previous day's high. Because this candle is formed here, generally the high, or is forming here, generally the high that's inside this current candle that's printing on the daily chart, generally that's going to be London's current high, right? And we can go look and see if that's in fact the case. Yeah. See? Well, London starts right there. It's close. It's somewhere in that high, right? So just a observation that I've made over the years. You know, it's all about consolidating your thinking, right? Like, how can we make it easy to keep track of everything that we have to pay attention to? And things like what I just mentioned are little observations I've gathered, along with many others. But yeah. So let me go to the chat. All right. Yeah, you guys have any questions before we get to the open and the real game to begin? If you guys do have any questions, let me know. So we're not needing to do it while, you know, we're looking for setups. I don't know why the camera moves all the time. Simplify central bank dealers range. Okay. Well, central bank dealers range. Come over to this over here. Let's actually use this real quick. All right. So central bank dealers range is basically taking a particular time from, you know, before London. Right, specific time, you may be asking. It's right here. 12 p.m. Pacific Standard Time. Just go down even lower so you guys can see what it looks like. 12 p.m. Pacific Standard Time. What is that? 5? What's 18? 6? 12 to 6? Is that 18? I think, is my math right? 12 to 6. You take that range and you get the bodies, right? You measure out the bodies of the candles within that range, the high and the low, and then you measure out, right? You draw a box on it, and then you duplicate it, right? You copy it or, you know, duplicate, and then you drag it down below, you know, 3, because that's standard deviations that you're creating, or you drag it up to the buy side as well. When it's a tighter range like this, generally central bank dealers range is going to be useful. Flout, there's a little bit more complexities to it, so probably won't get into that right now. That's if you use the flout if the central bank dealer's range is not necessarily within a reasonable amount. Like if there's a trending environment in Asia, and this right here looks like this, I mean, it's going to be very difficult to, or, not accurate to use a central bank dealer's range projection, because that's literally all it is, right? It's simply just a projection tool so you can identify where price could potentially reach for in order to pinpoint where the highs or the lows will form off the manipulation created within the power 3 dynamics, right? So essentially, you draw boxes from, the high and low, use the bodies, because that's the real story, right? From this time to this time, what is that, 12 to, I think 6, if I'm not mistaken. I don't know why the math is messing me up right now. It's too early for this, right? But yeah, you take that time and then you basically just use it as a projection tool. And of course, what I just mentioned hopefully simplifies it enough. There's more complexities to it, like the size of the ranges and the fact that ICT taught this in Forex. How does that translate to the indices? As long as it's not over 100 points, right, in the indices or the Nasdaq specifically, like the entire range, if you can fit it within 100, 150 points, generally, if it's a little bit less like this, I mean, even better, because that shows you that there's consolidation happening and it wasn't a trending environment in Asia. Because trending environments in Asia, going into London, if that's trending too, I mean, the projection for power 3 has kind of been exhausted. What are we going to do? Like if it's super aggressive going to the downside, look for it to go even further, right? And then try to pick it there if we're trying to go higher, or make it go even higher, hundreds of more handles to get above the Asia or central bank dealers range. No, we're not going to, because it may not, right? It may just be very quick, right? And it may even just reverse entirely going into New York session, right? So you want to make sure that you're identifying visually a consolidation, preferably to get the most accurate standard deviation projections using the central bank dealers range. But yeah, was I able to simplify that enough? Because I mean, of course, there's more other intricate details that you can add to it, right? ICT has like his whole videos about it. But if you want to keep it as simple as possible, this is what I talk about in terms of central bank dealers range when I teach it. It's literally just a projection tool. You can also grab numerous of them throughout the week. And if you see overlapping, well, you want to have more standard deviation. So maybe you use use like a fib, right? Go like this. Look around my thing. Is that it? Let me see. You could do something like this, right? Add the standard deviations up to four standard deviations. So you would basically take things like this, right? There's -4. You would go up to, +4, right? So 1, 1.5, 2, 2.5, 3, 3.5, 4. And then do the same thing to the downside like you see here. And you'd keep a template of that throughout the week. And then as price is printing towards a draw on liquidity, the draw on liquidity that you have, if it's in line with order flow, becomes a lot more accurate in terms of picking the weekly high and low, right? Using the central bank dealers range projection tactic. But that's obviously, again, it's more advanced, more details and all that. But if you want to simply use this on a day-to-day basis without even really worrying about that, because you don't care about being perfect, you could just simply look at it the way that I've just described. Try to identify Asia being consolidated, right? Get the highs and lows from the time from 12 to 6 p.m. 6 p.m. Pacific Standard Time. So, calculate that to your time zone. And then, you just look for the standard deviations above and below, and then study it, right? Study how accurate it is and how often it reaches these standard deviations specifically, right? The first one, second, and third one. And beyond the third one, again, you do not want to see it go down below that. If it does that, you're probably wrong, and it's probably not going to be a bullish power 3. If it does it above and goes beyond, it's probably not going to be a bearish power 3. It's just, one of those rules. So yeah, again, hopefully I was able to simplify that. It's something that people overcomplicate a lot. And, when someone's overcomplicating things, especially on YouTube, it's a testament to the fact that they don't know what they're talking about. Simplicity comes from mastery. At least, that's what I've learned and been told. And there's truth in that. If you can't simplify something so, a normal person can understand it, do you really know what's going on? Not everything is super complex, or it doesn't have to be. You can simplify very complex tactics. And, again, it's a pretty solid testament to whether someone has mastery over the thing that they're talking about. Some stuff you can't avoid complexities on because it's just that complex. But, almost everything ICT teaches can be simplified, and he's even admitted that. So, and again, the only way that you can simplify or even think about simplifying is by mastery, right? And mastery obviously takes a lot of work, lots of time, lots of back testing, lots of understanding of the core fundamental principles based on the topic. And then eventually, you can arrive at mastery, and you yourself may be able to simplify it as well. But hopefully I was able to simplify this, because that is a topic that people very much overcomplicate because they want to sound smart. But, I mean, why sound smart if you can't use the tactic you're using and accurately, and effectively use them? What's the point in sounding smart? There's really no point, right? So, but yeah, so that was a good question. I appreciate you for asking that. I'm sure that's a question a lot of people have. And I have this, I'm always using it constantly. So, and you will too, if you use it the way that I've just described. I don't discourage you from going to look at ICT's explanation, because he does have some other details. Translating it to indices can be a little bit confusing. But again, that's something we can dig into maybe later eventually. But let me go pull this up real quick. But again, we got 25 minutes before we are going to consider really even trying to think about doing anything. There's an argument here. There's an order block. Run on stops. Very shallow. Was it a run on stops? It was a failure. So it was a failure to run the stops. We got SMT here. So, I mean, that could justify this being a market maker sell model, trying to target these equal lows. Right, on its way to standard deviations. Again, the higher time frame narrative still has not necessarily got back in line fully until we change the state of delivery above this high. Well, preferably get above that high, but if we spend a lot of time above this, say it declines here and then rallies up into that, I think that would be enough to justify, because we got lots of PD arrays violated, many wicks violated. If we were to get up here, we'd basically be inverting this fair value gap. We'd break the high, so we got 1, 2, 3, 4 PD arrays. The price is now stayed above. So why would we force a short if that's going to be the case? So that's when things basically turn off, going to the downside, and then we could look at this as a market maker buy model. But again, if that doesn't happen, we painted the picture already as far as potentially seeing this fail as a market maker buy model, basically just to be a deeper tracement, and then disrespecting these levels, and then considering what I just mentioned on the higher time frame, that would put us in position to then try to target the lows down there and see a market maker sell model, and a continuation of what we've been seeing. And in my opinion, it's a result of the government shutdown. And even in the news release that we just looked at, some of them, it even says stuff about the shutdown. It was delayed, right? People don't realize as well how big the damage was. I mean, I think the U.S. lost over $100 billion, if not more, because of the shutdown. So that's not necessarily a positive thing. If we lost $100, sometimes for some people it's the end of the world. So imagine 100 billion. It's pretty insane. And whatever else, there's more damage than even just that. But yeah, let me pull up what I was trying to look for. Can't find it. I don't know what the hell's going on. Two, 1, 12, 11. So yeah, I guess he's using the 11. Oh yeah, because I can't adjust that central bank dealers range tool. That's why I just left it. Okay. So yeah, this is the actual time here that you go and find the central bank dealers range. And of course you see 40 pips or 20 to 30 ideal. Like I said, the outline that I just mentioned, because it's the Nasdaq, your 40 points is really tiny. You know, it's not enough. It's just not realistic. So I took it and I doubled it, and the studies that I've done on it for the last couple of years, I mean it's basically operated the same exact way. The effectiveness is still intact, and the precision for picking the highs and lows of the day using this concept. I mean it's very much still present, still valid. So, whoops. So yeah. Okay, and then like I said, if it's smaller, it's better because it's consolidating. And that's what we want, because then it builds projection like this. Right, consolidated for central bank dealers range, right? Within this time period. You take this box, you duplicate it, that gives you 1 standard deviation. ICT says it can go up to 3 standard deviations and still be valid, right? So yeah, just keep that in mind. So again, hopefully I was able to simplify that tactic for you and anyone else. It's a very useful tactic if you haven't really got to that point and you have all these other things like that you're digging into. I mean, if you're studying Power 3, this is pretty helpful, and hopefully I made it simple enough for people that are just starting to dig into Power 3, because again, it's just one of those things. Yeah, 100 billion is insane, and mind you, that's just a drop in the bucket relative to all the other things that took place. The only good thing that really came out of it was the fact that we've cut off a lot of jobs that are unnecessary. We've removed things that we were spending hundreds of billions of dollars on. So maybe it kind of balances out, but the market, right? If you have a negative event, I mean, they're going to try to weaponize it. They never let a catastrophe go to waste, especially in this environment, in the market. So, yeah. But yeah, Precious, did I answer your question? Hopefully I answered your question in terms of simplifying. But yeah, that's how I look at it, right? And then, I wanted to make sure that I showed you the source too. So yeah. So it's from 12 to 8. So if we took that assumption, let's actually get back to the frickin' Nasdaq. We do want to mark off this too. The fact that there is SMT at the highs. I don't necessarily feel overwhelmingly comfortable in taking shorts, especially pre-market open, when the DXY is just absolutely falling off the face of the earth. And there's no correlation there. And then, of course, we see the bonds going higher, and the yields are dropping. So DXY is in correlation. The currencies seem like they're falling in line with correlation, with DXY dropping. We did have a change in state of delivery here. Yeah, so we got that change in state there. I'm gonna make it a little bit bigger, and we gotta label it daily change in state of delivery. So we got one order block here, got above it, came back down into it. Let's move up a little bit and kind of see the 50% of this order block is right there. And what do you know? If we move up, we kind of see the context as far as having a reason to justify that, you know, this order block may continue to turn. Right, on the 3-day chart we see there's a 3-day bullish order block, and the 50% of that is being respected. You can't necessarily see the context of that when you're looking down here. This is why every time you're looking at a PD array and the delivery into it, you still want to move up a little bit, because especially if it looks like it may not continue, in this case to go lower, we could start justifying higher time frame context if we take a PD array that we're studying and move up to see what the upper time frame candles are looking like, and if there's any reason to potentially justify something like this holding. You see how it shows that the bodies are closing on this 3-day chart above the 50% of this order block. If I could find the right, so it's respecting that. So you can't make that argument down here, right, on the daily chart, or especially on these even lower time frames. It just looks like it tanked, right? And we were specifically watching to see this hold. That's not happening, and we got a daily change in state of delivery. So there's no reason to push the shorts unless it was to do something like displace lower and start inverting levels again, or reclaiming them like this, or getting back below something like this without blowing this high out. This high being taken totally invalidates, at least near term, price going lower. And if we have DXY continuing to tank, again, we're starting to build a narrative supporting being flexible and not forcing downside in the currencies or forcing downside in the indices if it's not showing us that that's what it wants to do, right? And so yeah, hopefully what I just mentioned makes sense to you guys. Just a deeper PD array analysis study. Stupid ad. So yeah, can y'all hear the music? I'm not sure how loud it is. I'm not sure if it's loud. It sounds loud in my headphones. Can you just let me know in the chat if you hear it? Oh, not at all. Interesting. Do you hear it now? So I never know, like, I can't really tell how loud it is, unfortunately. No. You hear it now? In the background, yes. Okay. Yeah, that's what I want it. That's what I want it to be. It's just in the background, not distracting. Is that a good volume? A little bit. Yeah, I like that. I like a little bit. Just like a faint, background music vibe. So we're not, sitting in silence. Although there's nothing wrong with silence. But I trade my private group with music on. And I don't know, I like having it in the background. So yeah, if it's not too much, if it does get too much, because songs change, obviously. If it starts getting too loud, too distracting, let me know, okay? That's the only way that I'm going to be able to know. Because it sounds pretty loud in my ear, but I can't tell what it sounds like with you. So yeah, if y'all could help me with that and monitor that and let me know if it gets too loud. That'd be great. Yeah, so again, we're just basically starting in here with price trying to dig lower. So, I mean, it makes sense, right? It doesn't just go straight up. If we're going to create a bullish daily candle, a wick that has to form, it's going to go below the open price, and it's going to reach for some type of discount array. And then once it hits that, sweeps up liquidity, right? We should be pretty solid to maybe see a change in state again, maybe get back above this 1 hour fair value gap, and then potentially support a run above these highs, maybe even to get up into this level up here. So in terms of buy side, you know, we may look to get up into that level up there. So yeah, and now it's just a waiting game, you know what I mean? But yeah, do you guys have any more questions? About 10 minutes. But essentially, this is all I'm really looking at. Kind of got a good feel for the battlefield at the moment. How do you attain this level of patience? Honestly, pretty much because I just know prices ran on time. I've discovered that through the years, and ICT obviously says it over and over and over. But if it's not the right time for the algorithm to do something, if you find your model outside of a time like a macro, or if you find your model outside of the session that you like to trade, right? Like a kill zone, it's not time yet, right? And if stops haven't been taken, because big moves have to come off of a stop run. Why? What's the logic? Why do they need a stop run? And why do stop runs generally, you know, when a big move happens, why is a stop run needed first? Why does a stop run happen almost every single time price looks to move aggressively? Well, because the logic smart money uses, they have to pair orders together, right? They have to pair losers with winners, right? Or buy side with sell side delivery, right? That's why they do the manipulation above highs if they're going to go lower, and the manipulation below lows if they're going to go higher. And all that happens within a specific time. We have to align it with a time because algorithms run off of certain components. And because we know that it's an algorithm that's running things, otherwise this stuff wouldn't be repeatable if it was all random. Since we know that, we have to obviously couple time with price. Time being macros, kill zones, so on and so forth. Price being PD arrays and liquidity, right? So knowing that on the back end, we have to wait. Otherwise, we're going against what the algorithm's logic is. You know, so I don't want to take more losses than is necessary. It doesn't mean you can't take a trade, you know, within that first macro, right? If it's presenting itself. But again, the way that I've developed patience is we first of all also know what we're looking for. Obviously, having a structured process that you've practiced over time, I mean, obviously it puts you in position to have better results. But again, just the way that the algorithm runs, the backtesting that you guys have to do, the backtesting that I've done in terms of time and how price uses time with the PD arrays and with our model, over time you end up developing the patience and awareness that waiting patiently for certain things to unfold first and foremost, and also the simple fact that things happen over and over and over and over again. I mean, you know, every week, every day in my private group, Every week here, you guys see me basically talk about very similar things, and it's happening over and over and over and over. So the confidence in that reality mixed with what I've just talked about with time and price studies and the fact that price has to do certain things before things unfold, solidifying those pieces of information into your psyche about trading really helps you have the patience. Because if you don't have the patience to wait for these things, we're basically trying to force our will on the market. Just because we want to take a trade doesn't mean that a trade's there. There's things that have to unfold, bridges that have to be crossed in order for us to get to that point, to make a decision, an accurate decision. So I guess a lot of that has come from experience, but experience specifically in what I've just mentioned. Watching every single ICT video is not going to allow or build patience for us. The understanding of why time and price is important, and the fact that algorithms need certain things to unfold or be told to them for them to do certain things. There's a rhyme and reason behind everything. In time and price, knowing that price runs off of time, then price. You have to wait for the times, right? Because if there's no time, algorithms need certain things, right? And if it doesn't have a time to do something, what is it going to do? Be random? People think that the market's random. I posted a reel today talking about that specific thing, about if things are random or are they actually controlled through an algorithm, and the benefits to them being controlled, right? Because if it's random, we wouldn't know what the hell we're doing. Are we really going to risk our money in an environment that's totally random? Who in their right mind would do that? Because your success is going to be random then, right? But we're predicting price. We're predicting where it's going to go. We're predicting the future, right? That's why they're called futures, right? You could go in there and predict it, and it's telling you what's going to happen in the future generally. As long as you know how to read the language. And because this is an algorithm, ICT Concepts is the language of the algorithm, right? Just like how there's multiple different languages, like English and other languages. There's rules to them, right? And they're very specific. Well, ICT Concepts has rules, and it's a language for the algorithm that basically prints price, the price delivery algorithm, right? That's IPDA, Interbank Price Delivery Algorithm. And there's a language and logic that it uses. And, we have to wait, given the fact that we know it's an algorithm, or have accepted that it's an algorithm, there's components that have to be followed. And it refers to PD arrays, liquidity inefficiencies, and time. But time comes first, because PD arrays and inefficiencies and all that, they get delivered to at a specific time, right? So we have to make sure that we're really solidifying the importance of the time element, and then the PD arrays. And again, over time, studying things with this perspective and some of the things I just mentioned, you're forced to have patience. Otherwise, you're basically breaking the rules, like basically crossing the street when the crosswalk's not telling you to cross. You're going to get hit by a car. It could be safe if you do it the right way. It could be predictable if you do it the right way, like cars are stopping at red lights, so it's probably the good time to go. It's a very similar thing here. When it's not the right time, you're basically at a red light still. And when the time comes in, and if you look around and there's no cars coming, right? Or, basically your model is showing up and you have a clear framework, then it's time to do something, potentially. There's always a risk that you'll do it wrong, just like how there's always a risk of someone running a red light and smashing into you in a crosswalk, right? When it's your time to go. But, you can make it not as often in trading, that something bad can happen. You can lose less, essentially, if you follow the frameworks that ICT shares, that I've kind of tried to point your attention to in terms of how things operate. It operates on time, then price. So in order for you to see price do what you want it to do, first and foremost, you have to do it at the right time. Time is kill zones, macros, the session you're trading within, the last 10 minutes, first 10 minutes of every hour. I use 15 minutes. So the last 15 minutes, first 15 minutes of every hour. Because I noticed that sometimes it starts a little bit earlier or moves a little bit earlier. As long as you're close within 5 minutes to the last 10 minutes and first 10 minutes of every hour, you're put in a pretty good position. There's an argument for whatever reason, people saying that macros aren't real. So even some people in the ICT community, which is kind of pathetic, because you could go in and just simply look and see that it's in fact happening. Like this move here. This was within the 5:15 or the 5:50 macro AM Pacific Standard Time to the 10 or to the 6:15 time as well, right? And look what happened. It moved, right? It didn't really do much because this is the unreliable macro. Doesn't always act this way, but most of the time it does. That's why we wait till 6:30 most of the time, or 6:50. Let that first 30 minutes print out and that first macro pass before we make a decision. It's just more clean that way, at least from my studies. It may not be the same for everyone, but for me personally, that's part of my process. That's what I've discovered and basically how I choose to operate. And over this year here publicly on YouTube, I think I have definitely proven a lot without being a lifestyle influencer and getting you to focus on the real things. So yeah, that was a good question. I appreciate the question. And hopefully I gave you some perspective that maybe you didn't have before. But that's essentially how you build patience. You understand what is the true market dynamics, what's really pushing price, how time comes into that, and then of course you back test whatever session you're trading or going to trade, and then over time you start to develop that trust. So then that trust can lead to you accepting patience, because it's a process to build it. We're all impatient in some way or another, and just like discipline, patience is cultivated and somewhat earned. Like you have to earn patience because it's an active thing that you have to do, right? And you have to control your impulses as well. So yeah, we see how this is basically opened up 6:30. It's inverting this fair value gap. If we're going to go higher, it's going to have to break outside of that. Again, if we break down below this, we'll be thinking about this as a market maker sell model. We have the larger one from this low to that high. But as it's going to print down into that, if it does do that, we can also take this as an accumulation or a consolidation, accumulation, reaccumulation in here, right? Basically, we could use this up here. And distribution. The first stage may be here. If we get down below that, we could monitor to see if that's going to be taking place. And then if it gets down deeper into this level in here, I think it'll rapidly reprice down below that. So I'm willing to let all of this go to get the best of the best scenario. Or if it gets back in line and DXY drops lower further and this breaks up above these highs up here or breaks up above this, inverting this fair value gap, we may be able to start to think about things going to the buy side. Right? If we're going to, think about things, again, we have the higher time frame that's bearish still until we were to break above this high. So that's something we have to keep in mind. The daily fair value gap's holding price. There was SMT between the indices at that price, right? And then now we're going into the open and price is digging lower a little bit further. So, that may continue and put us into the market maker sell model and prove to us that it's going to fail to be a completed market maker buy model scenario. Right? So this is kind of, or essentially what we're keeping tabs on here. Rodri, private good student, said, helps a lot when you trade along someone with good habits, experience. Yeah, borrowing experience is absolutely true. It's absolutely true. Especially when someone is not being an influencer that wants to shove Lambos down your throat and make you think unrealistically and, claim that it's always perfect and, give all these crazy unrealistic expectations. It's definitely a rarity in this industry to have a community like we have. It's a rarity to have good students like you guys too. because everyone's out here looking for signals. Let me just get a signal or I'm not going to watch anything. If it's not about telling me where to buy or sell, nothing's important. I just need to pay my bills next week, so hurry up. That's what the masses are. That's why most people will fail. But students like you guys are here listening to someone trying to give you real information based on experience, not claim that I'm the best, but I prove the efficacy of what it is that I'm sharing, which I've done dramatically this year and every day in my private group for 3.5 years. So you could rest assured that you're not listening to nonsense. And again, like Rodri said right there, it helps you build good habits, and you're borrowing experience from someone that's literally went through it. My first year, I lost $24,000. Beyond that, I ended up losing numerous funded accounts. I don't even remember how many I lost until I got my act together. But I think it's all worth it. We got to appreciate all the negative things that happen. They're not negative, right? Losses are lessons. You need it. You need adversity to build mental toughness in this industry. So don't shy away from the things that take place, whether it's losing accounts, whether it's winning accounts. There's positive things that you can take from all of it, and you want to make sure that you're appreciative of that and not shying away from it. But that's where your journal comes into play. You want to really spend time with yourself because you have to trust you. And if you don't know you and you're wondering, why am I making these mistakes when only you have the answer? I mean, you could imagine that it becomes a task that's, a little bit unreasonable, right? And sometimes impossible for some. As long as you got the right information, stuff that's provably true, which you guys have here, and with ICT Concepts as a whole. And then you spend time doing the studies, back testing, really digging into things, trying to actually understand what's going on, and then managing your risk, not being too reckless, keeping your expectations reasonable. You got to cross one bridge before you get to the other, right? You got to lose less in order to go break even. You got to do both of those before you become a little bit profitable. And you got to become all of those things before you become actually profitable. And you got to have discipline. You got to develop the proper mindset. There's so much stuff that needs to be done outside of technicals, and people just disregard it, which is why it's so difficult, and most people have a horrible self-image of themselves, and they make promises to themselves and never keep them. So how can you expect in the moment and with something that has so much behind it emotionally, like trading, how are you going to expect yourself to trust yourself that you're not going to break the rules and blow your account? You shouldn't trust yourself if you're breaking the rules, over trading, taking 10, 20 trades a day, over leveraging, maxing out things on credit cards, knowing that you're not doing the study. I mean, all that stuff, should make you uncomfortable. It should make you not trust yourself. But you have to break that by not doing those things. And over time, the self-confidence and trust becomes, something to really appreciate. And you start appreciating yourself. You prove to yourself that you deserve to be successful because you're acting like a professional. And you can just imagine the difference between those two elements, right? The breaking promises to yourself, breaking all the rules, not doing any of the study, expecting a Lambo tomorrow, versus someone that does the study, is reasonable with their expectations, is really focusing on themselves, doing the study they have to do, back testing, asking questions, getting around communities like this. You could just see the difference. It's just night and day difference for your self-confidence. And then, of course, only one of those two categories is going to have trust and belief in themselves, and mental toughness enough to be able to overcome the probabilistic experience that we all go through as a day trader, or as a swing trader, or as a trader in general. The pain of discipline is better than the pain of regret. Missing a move because you're being disciplined, it's always going to be more of a profitable endeavor than breaking your rules and feeling the pain of regret. So you only can choose one. You can't choose both. They don't go together. Same with the different mindsets that I just talked about. The undisciplined, unserious, promises always being broken versus the person that is serious, doing all the right things, and is really, really doing all the stuff that they know they need to be doing, so they can become successful. So yeah, again, we're just basically watching this. There could be an argument in here to have possibly taken a small short, maybe targeting the lows here. Maybe you think that the higher time frame, because it is still bearish and we haven't necessarily broke through our order block level up here, maybe you're still interested in taking shorts. There's nothing wrong with that idea. So maybe that would have set you up inside the macro in here, right? 5 minutes before. You see what I mean by it starts sometimes 5 minutes before? This is 5:48, right? So a couple minutes before the 550 macro. We did have a shift. We did have a run on stops that happened. We did have SMT, well, a failed run on stops, small run on stops here. And then we see a shift, fair value gap. This wick here, we see a respect to the 50%. And then we got potentially equal lows down here that could be targeted, even if it was going to go lower to go higher. Anything you trade before the 6:30 open is part of the manipulation most of the time. Not all the time, but most of the time. It's doing time distortion or it's manipulation. Right? So that's why it's risky to trade before the 6:30, before the 6:50 macro. And you got to keep that in mind if you do trade pre-market open, because you could get stopped out, but then be correct at the end of the day. If that's something that you deal with, check the times when you take executions, because again, that's another reason to be patient. Unless you know how to navigate the manipulation and you've experienced it, or did backtesting on it, or sat and watched it live with this mindset in mind, it's probably best to wait till after 6:30 in general, if you're a New York trader, AM Pacific Standard Time, right? But yeah, this counter trend move to try to set up a drop, targeting the lows here, with the expectation that it may use that to go higher again, could be something that takes place, or something that you could think about that could have got you into this idea. I already made the decision that again I was going to wait. There was news at 5:15 or 5:30, so maybe that could also added to the potential interest in taking a short, or just an execution in general pre-market open. Given the fact that there's two news events, though, that's another reason why I'm waiting till the 6:50 macro to really make a decision. Because when you have two split up news events, sometimes you can get caught up in the first one, especially if the first one accelerates. But then we have that secondary news event that may turn price around, depending on obviously what the context is. And we're kind of waiting to see what the response is at this 1 hour fair value gap. I can say that if we get this run on stop that leads to a displacement above this, that would put us in position to target the highs up here, and it would most likely be low resistance to get up there, up through that. Right? And again, if this just continues, we could just simply wait till the second stage distribution and try to find a continuation variation of our model to then try to target the equal lows down here. Again, there's justification in here, which I hopefully laid out in a understandable way, as far as the mindset that could have been used, the different indications that could have been used to try to target from here down to the low. Again, I didn't take it. I'm classifying this as potentially manipulation if we are going to continue to see this go higher. That interest is not fully justified yet, because again, we haven't changed state of delivery yet. So it's still just basically a deep retracement, similar to how this was, right? And then it just continued to tank. So again, we'll see what it wants to do. Move up a little bit. Do see there's this fair value gap. I mean, again, we could just simply use the fair value gap here. It's definitely significant if we can get down below this one too. Maybe I will just use this. Kind of see how that's going to behave. Because this simply looks like a, retracement to go lower. And again, higher time frame is still bearish. We just have a pretty aggressive DXY declining in here. We have a regular trading hours gap above us. We go to the indices. We did have a regular trading hours gap above us in here. It's definitely dumping off, right? Continuing the higher time frame bearishness that has, again, still been in effect. I wanted to see how we would treat this. This is now pretty solidly convincing me that we are definitely going to continue in the sell side direction, which again, that's what we wanted to anticipate. But we had to make a contingency plan to see if it was going to potentially sweep the lows, then go. But now that we have this information going into 650, we're going to continue to see if that's going to remain the case and try to see if we can't catch something to the downside. Only way that I look for buys again is if we can get back above this high here. Otherwise, it just basically shows that we manipulated above the open price for the week down here. Right, kind of went down below, but we've rallied up. We've hit a inversion daily fair value gap. We also hit, well, is that an order block too? I think that was it's the daily bullish potential order block. Let's actually move up a little bit and see if we can't get some other stuff. So yeah, we're still also again in the context of this bearish breaker. So here, I'm gonna actually take that off. We got that 1 hour fair value gap. Got the daily fair value gap in there. So yeah, if this wants to continue, again, we're still inside this. So the bearishness is still pretty intact. And price is kind of just hanging around inside this weekly range. So, and now look what's happening. You see how price goes up, down, overlapping candles like this. Generally, that's not the best for high probability or low resistance, I should say. Because we're basically chopping back and forth. It's indecisive. It's just like accumulating in this area nonstop. There is big ranges because it's super volatile right now, but we are just, going higher, lower, and again, the underlying sentiment overall, like structurally, it looks like we're still going to hold on to bearishness. So that's what we're going to, again, continue to focus on because we couldn't get price to get up above that to change the state of delivery. Right, and we've, pretty much been bearish until something changes. Has something changed up to this point? No. Was something changed when we first started looking at price? No. What we can see is there's a huge crack in correlation between pretty much every asset against the indices. So this is obviously a heavy impact for U.S. assets. And I mean, we could see that it's just continuing to be punished. So yeah, so those are all reasons to continue to try to look for possible sell side ideas. So now that we're 5 minutes before the macro, again, let's make sure that we grab this, pull that over there. So yeah, we're pretty solidly below that. So let me go here. I think I'm gonna actually use this. So we'll keep tabs on that. Again, because we've now came back down and overtaken this with one bearish candle, we cannot see it get back above this if we're gonna trust bearishness, because now we've overlapped the fair value gap. Right? So if it was to get back above that, it's not going to act as a balanced price range. And if it's bearish and we see this type of scenario unfold, we could trust that it should be a balanced price range and treat it as real resistance. And again, if that doesn't happen, that's how you be flexible, right? You'd adjust and then try to see how it treats the above portion, and then use that as a rocket ship to try to get us up above. But because it's now broken down below it, we have to see, can we trade back into that, use it as resistance, and when price trades back into that, do we see our model set up, right? Is price going to form our model, right? So the contingency plan for us to potentially continue and go into the buy side to trigger in that daily order block, it didn't happen, right? And that was what we needed to see if bullishness overall was going to be continuing to be trusted, or if it was going to turn around and basically just continue going higher. So because that didn't happen, the sentiment remaining bearish with a contingency plan laid out to go bullish if certain things unfolded, like maybe sweeping below this and then bouncing higher. Because that didn't happen, we're sticking to the main narrative, which has been continuing to trust the price is going to keep pumping lower, even with the crack and correlation, right? We do have to keep in mind that there is a crack and correlation, because if we start to see the switch get flipped, where prices then starting to rampage to the buy side, we're able to then quickly adjust and get back in line with that. I do see that we are at this moment starting to really reach down to these lower levels. So again, I now see this as a potential market maker sell model to try to get us down below here. So getting down into these deeper levels, right, down into these levels here. Let's move up and see if we can find, okay, so I will use this level here as my second stage distribution. First stage distribution, okay, is right there. Smart money reversal, or smart money reversal here, low risk sell. First stage distribution, didn't really have much, and it just blew past 50%. So it seems like it's in a hurry to get down below. And this may be the high of the week because it's Tuesday. So this may be consolidation, manipulation, distribution to try to target deeper sell side because of the failure to get beyond the bullish order block and turn it into a change in state, a reliable change in state of delivery. Or just say, yeah, keep expectations. This is super important. Let me see. I didn't miss any questions or anything. Yeah. So hopefully everything makes sense so far. Again, you don't see me panicking, even though it's delivering. That's fantastic, right? That it's moving, and we've now pretty solidly confirmed that it may continue to go lower, unless, of course, price gets back up here. What I can say about buys, if they were going to manifest, if we can get above this, I'll look at this as a potential market maker buy model. But for now, we're going to try to see if we can't get this to continue in a market maker sell model fashion, simply because the higher time frame has still not fully confirmed that we're done being bearish. And this reaction is from that weekly bearish breaker, right? Remember, all of this delivery is within a weekly bearish breaker. Maybe if I come up to the higher time frame weekly chart and I duplicate this so we can kind of cover the 50% of it, so we're not getting lost or not thinking about it. So we've got the 50% of the breaker in here, right? So yeah, we'll see what happens here. If it is going to continue dropping and correlation does finally kick back in line, again, I want to see aggression, right? I want to see us aggressively prove that we're not going to spend much more time below this and price wants to go higher. We have to invert levels, right? Fair value gaps. We go a little bit higher. We have the 2 hour. I'll use the 2 hour instead of the 1 hour. So this would be a pretty solid trigger for me. That buy side may look to get started up again, and all of this may be the manipulation, consolidation, manipulation. Again, like I said about the central bank dealers range, we're now down more than 4 standard deviations. So many times it's unlikely the price is gonna want to, turn around. Of course, this is not a be-all end-all. It's not perfect. It still could use this and then go higher. It could do that. We're just in a more high resistance environment. It's the end of the year. It's the end of the month, right? We have all these things taking place, a holiday week. So things may be a little bit unorthodox at times. And you have to be ready for that because that's just the nature of trading, But the components of everything that we talk about, they're always there, and we just have to be able to be flexible. And that also comes with experience and knowing how to be flexible. And hopefully I do a pretty decent job of teaching you how to do that. Isn't that a low probability when DXY and indices moving? Yeah, so it's a Kraken correlation. That's what ICT calls a Kraken correlation. The first stage of identifying high probability is going to be market symmetry, or basically risk on, risk off, which I made a video talking about institutional order flow. I mentioned risk on, risk off. Every Sunday, I'm doing a risk on, risk off analysis to gauge what kind of condition we're in. So, if that's something that you don't really know much about, I definitely go through that whole process. And I also made a video, pre-recorded video for last Sunday, last Sunday that just passed. So then you guys can always go back and refer to it. I talk about many other things too. Reading institutional order flow, the relationships that order blocks and fair value gaps have with one another as price is printing, how to read them to confirm or invalidate a particular narrative, and a bunch of other stuff that you can go look into. So Precious, if you haven't done that, if any of you guys haven't done that and you have weak points with your analysis, I think I made a pretty good lecture the other day about it. So hopefully that helps if you do look at it. If there's something you think I didn't add or you'd like to hear more of, just let me know, and then I can make more amplified videos about it. Whatever it may be. So yeah, what do you think about this right here? You think that's something telling us that, let me go get in a short, guys. Let me get in a short right now. I'm so excited, right? This is why I didn't take a short, Even if, we did take a short though, that went well over 100 points. So if you take my advice, we would have been in and out anyway and been able to capitalize on that. But yeah, if this wants to continue doing what it's doing here and we get above this fair value gap, we could use this as a second stage distribution in here. And yeah, let's see what happens in here. Until it breaks outside of this, buys are not of interest, right? So it's still potentially setting up a short idea in here to then target the lows right in here. Definitely, I think we filled in the whole. I think we filled the whole regular trading hours gap in there too. Yeah, this looks like a typical consolidation, manipulation above weekly open price. We got bearish power 3 happening here, consolidation, manipulation, potential distribution. Right, the open price there. So now we're looking for this to potentially be redelivery to continue going lower. Again, unless it gets back up above this. This run on stops, shift in market structure above this high, is a 2-minute YouTube model scenario potentially to go higher. And those of you that are in the private group know about the Razor model. That's something that you want to be trying to observe here, study it, because the different components are right in front of us. And if we see the double change in state form with DXY continuing to tank, while we get up above this 2-hour fair value gap, we should be set for a pretty nice continued low resistance run above these highs because they left the highs available. If that happens too, it's going to trigger in the bullish order block as well. On the daily chart. So let's see what happens here. We got the fair value gap, run on stops, another order block formed, and now we got relative equal highs up there, so it looks pretty nice, right? It looks like they've used all of that as manipulation. S&P on the higher time frame, if we get up above this, is going to be fully confirmed bullish. So it's definitely huge wick on this daily candle. Look at the wick for the daily range so far. Huge wick. I'm not sure why that doesn't align. Not sure what indicator's incorrect here. But it's definitely, it's basically close into that. It's the 9 o'clock time. PM Pacific Standard Time right here. It's close enough. So yeah, now we're pumping up. See what happens in here. So that news just dropped. So let's see what happens with DXY. Very massive retracement in here. So we're just basically wanting to observe how this is going to work out in here. There has been some of the models we use unfold. Like I said, there was some ideas for a short. And now we're looking to see, is this going to continue this? Is this going to be manipulation? The Kraken correlation obviously puts us in a pretty risky environment. Yo, what's up, Nico? Appreciate you hopping on, brother. See how it treats this in here. So I could say that if we break this high up here, I'm certain that we'll take out the highs up here. Yeah, the news just came out, so let's see what the impact is. Looking like it's going to be just a deep retracement. See, I'm not really interested in anything in here right now. It's very, very volatile. Huge decline. It's reasonable that they did this. So now that we're back below this 2-hour fair value gap, unless it gets back above the 50% of that, it's unlikely to continue going higher. and it'll probably continue this market maker sell model. This is the first distribution. See if we can't get it to come down to the second stage distribution. As long as this high stays intact, it's going to keep going lower. Again, the correlation problem makes it, you know, you got to be very cautious. But yeah, let's see if we can't get that to continue down to there. Any questions? No. So yeah, what a nasty retracement. What a nasty, nasty retracement. So we got another shift in market structure here. Right, so it's basically taking out stops in here, basically retraced. Got a shift in market structure. Now we got us back below this fair value gap. And it looks like it's just still going to continue. You know, it looks like it's going to keep dropping. We're still within the macro, the 650 macro. So we'll see if that is going to continue. There's nothing telling us to buy right now whatsoever. So we're not going to force anything. It does look like it's just going to continue to drop. So that will be what we stick to until proven otherwise. Crap, what was that? Could say that if it gets down below this, that'll probably act as a bearish order block, bearish breaker. And it's always risky to take trades with the DXY when the relationship looks like this, because at any moment they could flip the switch and everything will get right back in line to the way things are supposed to be overall, because everything's interconnected. This just shows you when there's a crack in correlation, there's heavy manipulation going on. And you can kind of visually see it. It's whipping back and forth like a savage, right? So you got to enter low risk if you do anything at all. And you have to make sure your model's there. No gambling. It's not how you succeed. You know, we got a plot and plan. So we've got this fair value gap in here. Which one's going to get back in line? Which one's a liar? Someone's lying in here, right? Is it the indices or is it the DXY? We're going to be able to tell fairly quickly, I'm assuming. See what happens. See what's going to transpire out of this. They definitely shook out early short sellers. I mean, it's definitely a pretty nasty back and forth in there. DXY is definitely looking like it's opening up a little bit, or at least stopping from going lower aggressively for the moment. You know, again, I'd still like to see this move up from here. If it doesn't, again, that's going to confirm that it's going to go lower, and then that should send the indices higher. Yeah, we're just going to have to wait and see. You know, nothing in here is really overwhelmingly confidence boosting. You know, it's just nasty. It's really nasty deep retracements. Let's see what happens. So we've gotten above this. That's not confidence boosting for an ideal short. It could wick above it a little bit. But if it breaks above this candle here, that totally disregards all ideas to take a short, at least in this current moment. Again, higher time frame wise, we're still bearish until it was to get up here. Then that would fully confirm on the higher time frame that, you know, we're going to then go to the buy side. So yeah, it's spending a lot of time in here. So because it overshot this, thinking of the YouTube model potentially, it's now out the question. So let's see what happens. If it gets above this high, we could look at that as one change in state and then a second change in state. And then we'll use that as a potential ride to get up to here. If DXY keeps going lower, this will be a good example of what I mentioned. If we do get up above this high, how at any moment they could flip the switch and price will just go in the intended direction relative to the correlation. So this one right here, we have an order block. If it was to break down below this, that's pretty confidence boosting that we will, in fact, try to dig down there. But again, we're going to have to wait for one of those two things to take place. At least that's what I'm going to do. I'm not willing to trade in this back and forth like this. It's in the macro. The macro did present us with this huge run, or not huge, but it's sizable. And then just came back down, and it's basically just been sideways. If you think of power of 3, we have the open price here for the current hour, 7 o'clock a.m. Pacific Standard Time. Right, you drag the open price over. We got to drop down. If it goes higher, that's what you want to see if the hour is going to be bullish. We have an inversion for value gap in here. It's taken stops. DXY, I mean, it's still got a nasty correlation going on. We got the other indices rallying. That's pretty nice. What's the S&P doing? So yeah, the S&P and the Dow, they look pretty aggressive. So we may be in line to see a run going to the buy side in here. So the correlation is going to potentially kick back in line. I say if we stay above this, it should be pretty likely that, you know, if we take this high out, so if we stay above this and this, these will be part of the target. And if we can get the other indices to keep that up too, you can start to see that it's becoming a little more clear what it's really trying to do. You know, all this may still result in manipulation. It's not really interested in getting anywhere fast right now. It's kind of just stuck, right? Yeah, let's see the reaction here. Let's see the reaction. It should, if it's bullish, hit this and go up above that. So that's aggressive right there. So again, are buys of interest? Is there anything super convincing at the moment? For me, there's not. You know, we got to see if it's going to close outside of that. There's nothing I'm willing to execute in here. If we get down below this, that'll be a double change in state back to the downside. And then again, that would set us up to potentially frame an idea coming down to there if a model you trade is in line. If it's not there, you're simply reading price, studying the relationship, right, of each PD array, of, you know, the time, right? What is the time doing? What did the macro do? What are the other assets doing? I mean, it's just nasty. It's disgusting in here. Look at it. All across the board, everything is just wild. So, not anything I'm personally willing to do anything in. Let's see the chat. So let's see what happens in here. So basically took out that low. We're literally inside this range here. The current hourly range, hourly high, hourly low for 7 a.m. So if it's going to be bullish, this is what you want to see every time an hourly candle opens up. Here's the open price, drop below it, hit some type of PD array relative to the time frame, and we want to see an expansion. If it was to the downside, we prefer to see it get up above that. It's power 3, right? It goes on every time frame you look at. The same dynamics apply. So yeah, nothing in here is really overly convincing. If we get up above this and we see DXY drop, that would be pretty present us with a pretty decent potential to try to get up here. But again, we need some displacement away from this. This is too choppy. The morning has been too sideways, back and forth, essentially. Seek and destroy on the Dow, right? Buy side, sell side. Nasdaq definitely ran up, swept these highs here, left S&P with this high and that high, and then started to pretty solidly decline and blew past some of the fair value gaps in here. Remember, we still have this that we're watching as well. There's that first presented fair value gap. So this was the first presented fair value gap. Seems like it's staying below that, so it's generally a good thing to see if we're going to try to attack downside delivery, staying below the first 30 minutes, or the first fair value gap within the New York AM session. Every hour also, ICT has said that there's a first presented fair value gap idea you could use. It's another thing for your studies. That puts us basically right here. So this is the first presented fair value gap for the 7 o'clock hour, right? So that's why this is going to be significant as well. It's either going to hold, use it as support, displace above this, confirming that it's going to target up here, especially if DXY declines. But if it breaks down below that, I'd prefer to see us get down below here, because then that'll be a bearish order block here, bearish order block here. Multiple order blocks, multiple PD arrays being violated to the downside. And then again, we have a pretty clear target, and we have a framework being a market maker sell model and a failed market maker buy model on that larger time frame we talked about. Right, with this high, low, going up to the high. So sell side, buy side. So again, we're in a position to wait a second, right? Regular trading hours gaps above us too. You know, so if the price displaces above this high, it's getting above numerous levels in there, right? First presented fair value gap, the down movement here that creates a bullish order block. Because it took out this low, these up candles becomes a bullish breaker, okay? And then we got equal highs up there as well. If DXY keeps going lower, again, the switch could be flipped at any moment. You know, there's heavy manipulation right now. That's what cracks and correlation provide evidence of. So smart money's they're doing something right now. Something's being done on the back end that we're not privy to, and it's causing the disruption. So we gotta wait. So one thing we got to consider too, we did have a very large range yesterday. So it makes sense that the retracement lower or delivery lower against that is happening in this session. Whenever there's a fast London, a fast previous day, many times the characteristic is retracement. Maybe that could have been a stronger justification to frame out that short idea that we talked about earlier, like the framework of it in here within that macro. So there's some justification there based on the large previous day's range. So just another observation to put in your notes, like a takeaway. Got a low here, high that took out the highs, left this one, but still potentially also a breaker, essentially. So let's see what it wants to do here. It's not really doing anything, really. It's kind of just, it's getting above this now, so let's see if we can't pick up speed. And again, if it gets up above here, I'll be interested in potentially taking a buy up to the top. See if a model could show up. Then we have this gap in here. Can also be something useful, right? Hopefully you guys have not done anything crazy today. That you see why I haven't taken an execution though. I know that I'm not trying to sit in something like this. I know this is a likelihood until it gives us displacement. And I'm not trying to sit in sideways movement, right? We anticipated potential, harder to trade environment because it's been sideways. The overlapping higher time frame candles, the cracking correlation. Yo, what's up, Byron? A little late, bro. What's going on? What's happening, bro? You didn't miss anything, that's for sure. But, So yeah, we're just waiting for displacement in here. Just imagine you being in here, sitting through this. If I cannot engage something like this, I will. Or I will not, I should say. Yeah, Chop City, that's for damn sure. Yeah, this is a great example of large range previous days or large range London session leading to a bit of a choppy next session, right? Yeah, we see a massive interest to want to go lower. It's insane. It's like refusing to do much of anything to the buy side. So again, that market maker sell model idea, because we haven't broken out, right? That large or the small market maker sell model idea here, I mean, it's looking more and more tasty as price keeps failing to get back above these upper levels. But the crack and correlation, I mean, it's just, I hate when it's super cracked, but everything else is in alignment. Like DXY, right? It's following the yields. Bonds are still moving higher. That should be dragging the indices and currencies up. The currencies are following what they're supposed to do, though. Look at that. Right? It's doing exactly what it should be doing, what the Nasdaq and indices should be doing relative to the relationship. But crack and correlation, I mean, we're in low probability conditions right now. You know, in that fast-paced previous day in the indices, I mean, we could see that they're kind of on an island of their own for whatever reason. Just a lower probability environment. Some of the tools we use kind of get sidelined, like the overall correlation ideas and how that justifies a move towards one direction or the other. You know, we're kind of like, it's kind of like silenced at this moment. But again, everything else is moving in the way that it should be moving. So at any moment, whenever they decide, they could flip the switch and it could just fly off the handle and get back in line. But that's the risk of taking trades that don't have a correlation that's not cracked, like a correlated asset relationship. When it's cracked in correlation, that's why ICT says that's the first stage of high probability symmetrical markets. So yeah, we'll see what happens in here. Only way that I'm willing to do anything is if we can get price to displace above here with DXY declining. Or if we could see DXY ramp up, because, you know, we got the DXY reaching into this fair value gap still. It's kind of deeper than I would have wanted. So it's not as bullish as I was wanting to see it be. But, you know, if it does end up turning around, so be it. Because then that'll support this going lower. But, I mean, this continuing like this, you know, we may end up seeing the Nasdaq and the indices eventually wake up from their sleep, right? And then start to follow suit with the currencies. This is what I wanted to see if the Nasdaq could do if DXY was going to do this, right? And then, of course, if it was going to continue to drop, we confirm that the buy side is not going to be necessarily part of the equation once we break down below this, because that then inverts this and this becomes a balanced price range, and it should be used basically as a pretty solid resistance level, going from this high to there. So all of that should be balanced because we got buy side, sell side, buy side. And then if we're going to continue to drop, it'll just continue to paint further balanced price range or price delivery to the downside. And it should keep respecting it as such. So let's actually measure this. See if we can't get this to, so yeah, we're at the 75%. There's just really not that much to do right now. You know, I'm not willing to sit in a stupid consolidation, sitting sideways. I mean, look, you see my hesitancy to get into a trade, my intuition to not get into a trade. I mean, it saved this, right? You know, it's just, some conditions are pretty predictable when it comes to them not really being convincing. And then we have to wait for certain stuff, right? We're still inside this hourly candles range, at least the current range, this high to that low. We're inside the 7 o'clock hour AM Pacific Standard Time's range. You know, are we accumulating in here? Is it eventually going to wake up? Could very well be the case. You know, it could just be simply accumulating. Trying to see if there's any S&T or anything we missed. Doesn't look like it. Do got the Dow here. We got a wick, right? It's definitely looking like it wants to hold that. We do have this wick in here we could watch. See how it wants to treat that. We do have also this low. Did that high. You can see equilibrium. It's basically dragged itself down to there. So equilibrium's right there. Yeah, I can imagine that anyone else live streaming right now, I bet if you go look at them, they probably have blown it up. They're probably just not having a good time. While we sit over here calm, cool, and collected, not worried about really anything. Just price is looking like a shit show right now, you know? So it's kind of is what it is. Looks like it's becoming more and more convincing that it's going to get up to the buy side. So now we got a run on stops. Shift in market structure. We're back above this fair value gap in here. We still got this 2-hour fair value gap. If we can get up above the 50%, that'd be nice. And then maybe we could find, let's see. Yeah, it's just a mess. It's disgusting. It could stay stuck inside this range, going sideways. But we'll see. If all the other indices open up, everything else is moving the way it's supposed to. So the indices are the only thing catching up right now. And look how fast it's moved now. After stalling out aggressively, it's now moving. It's probably not going to really offer much of a retracement now. If it is going to go higher, we could potentially see that first presented fair value gap. You want to watch that, see if it acts as a launching pad. Because now it looks like we're potentially going to continue into a market maker buy model. See if it can't use that as a little launching pad back to the regular trading hours gap, 50% level. Again, we got a breaker in here, this up candle. See how it wants to treat this in here. It should not have to come back down here. All of this should be balanced if it is going to be bullish. Why? Because it's buy side, sell side, buy side, sell side, buy side, sell side, right? We've pretty much secured all of that. So assuming that we're going to kick back in line with correlation, Nasdaq is the sixth sister of the three. It's the weakest one, the most interested in hanging around to the downside while the others are moving. But that doesn't necessarily mean it won't get up here. It may have a harder time than the other ones, though. But like I said, at any moment they could flip the switch and we get back in line with what it really is intending to try to do relative to the correlation. So like I said, this gap in here, it's definitely something to observe. So let's see what happens. Everything is supporting this potentially continuing to go to the buy side. You know, we may just be potentially caught up in a day where it doesn't choose to open up, at least for the Nasdaq. But if it's going to follow suit, you know, we should be able to see us get above this gap in here. It's a 30-minute fair value gap we could mark out. Let's definitely monitor that. See how much in this in here. Run on stops. Seems like we're going to still continue. So as long as we stay up above the 50% at this high to that low, I prefer us not to come back down to that gap down there. If we could see it hold that, that'd be great. But it's definitely a very high risk environment in here. If it does continue to run up, I want to see us hold these levels in here. If it breaks down in there, I'm probably not even going to be interested in much at all for the rest of the day. And we'll be done probably by the next macro. But yeah, it's one of those days where it's offering things and it doesn't. It offers it and it doesn't. You know, and then the correlation problem is definitely something up there. Yeah, just to prove that I haven't really done anything. Amp live. Execution marks. There's nothing. Because there's been nothing that I've wanted to engage. You know, we've talked about some stuff, but it's just not there. And think about it, if you were in something right now, you'd probably get stopped out. You know? Probably would have got pushed out. You know, or got out early. You know, it's just one of those days. The correlation's a mess. Nasdaq is the messiest of all three of the indices. Surprisingly, the currencies have had the move that we wanted to see in the indices, and the correlation is just a problem. So there's something on the back end happening in the stock market. I'd like to see if this does retrace into here. Again, I don't want to break down below the midpoint of this. Definitely don't want to break down below this. But if we get back above this, that'll be used as an inversion, potentially. That may set up the next leg higher. And then again, present us with the market maker buy model scenario. So see, I don't trust shorts whatsoever, given the fact that the DXY and all the other assets are not supporting that at all, except, you know, these assets are kind of stuck. So it's not trustworthy whatsoever. So we have to be able to accept that and just not do anything. You know what I mean? Appreciate whoever subscribed. I don't know why I don't have the little logo thing that pops up. Kind of sucks, but I don't know what the hell happened. Something happened to it. But yeah, thank you whoever subscribed. Appreciate the support. And thank you guys for liking the video. See, most of you guys liked it today. Really appreciate you guys doing that. Gets me in front of other people that can get this information so they don't wreck themselves. There's already enough people destroying their lives. We don't need to have something as amazing as trading play a part in that when it can be the total opposite. You know, all we gotta do is have the right mindset, you know. So yeah, someone else just subscribed too. Yeah, I appreciate that. Let me see. I think I could see who did it. Oh, Rodrigo. Captain Singh. Appreciate you guys. So yeah, I'm watching this. If this doesn't respect by getting above it and inverting it, I mean, this may be what it uses in here, right? We're now trading downside, buy side, downside again. If it gets above it, that's a balanced fair value gap. And if we push away, that's pretty solid confirmation that price should get up above these equal highs up here, at least. And of course, I wanted to see if we could use a first presented fair value gap as a launch pad. It may still do that. If it gets above this fair value gap first and then pushes into that, again, this will be used in a similar way that this one potentially is going to be used. Yeah, at the moment, we're just simply waiting. Yeah, we got run-on stops here. We got a fair value gap. We got another order block, one order block here too. So double change in state relative to the second chart right here if it gets above that. So we'll see what happens in here. Let's see what happens. We want to see it hold in here if this is going to be a viable potential framework to get us up into these highs. Yeah, respecting this, coming back into it and displacing lower, that makes these lows even more likely to be targeted. We are in a consolidation right now. So this is what we have to really think about. We have to make an argument for both sides and then see what the relationship is with the PD arrays. How are they respecting? You see how it's staying inside this? I like that for it to hold. I mean, it's perfectly respecting inside that fair value gap. So until it breaks out of it, there's an argument for us to get up and target these equal highs. It did engineer this liquidity. So that's why if it breaks down below this low here, it'll be pretty likely that it's going to target this. This should not be taken out. If it does get taken out, again, it's a problem. You know, we're hanging around inside that fair value gap pretty solidly, back and forth. Playing ping pong real quick. Boing, boing, boing. And again, that's the 1 minute. Move up a little bit. Maybe we could see a bigger one potentially. No. Yeah, no. You also can see this order block here. So if it gets up above that, that'll be another reason we should be able to see price hold. Got this order block, this order block. So yeah, we'll see what happens. Pretty accelerated, nasty run to the buy side here on the DXY. DXY is just vicious right now, huh? Just dumping off. Sharp retracements. Continuing to fall. Not sure what this is. I think that's equilibrium. Yeah. So yeah, I think all of a sudden found strength in the DXY or interest off or buy side. I think it may upset this. Again, we're just stuck inside here. Have we broken out and then reused it? No. So it's not necessarily convincing. Now we're getting down below here like it did here a little bit. Let's see what it wants to do. It's going to close back inside. We're approaching the macro, 750 macro. So again, time and price. Price is the PD arrays. Time is the macros. And the kill zones, right? Macro was in here, triggered in a response there. This macro started the decline for this. And then we entered this macro and it created the opposite end, right? From macro to macro. Macros can be used as timing stops as well, right? So you could like execute, and then when you exit, if you execute in a macro, sometimes, a lot of the time, you'll see the retracement happen in a price leg when it hits a macro, because a lot of times that's also aligning with a opposing PD array, right? So let's see how this treats this. Again, if it gets above this, makes it a little more likely that we're going to hold and keep going, potentially targeting the gap up here. I would definitely like to see us get up into the gap. 50% of the gap would be pretty nice too. It's a pretty nice response. That's a really nice response, actually. See what I mean? How price needed to hold above that, and then it would offer potentially a run. It's pretty nice if you ask me. See how it got above it? Using that as a launching pad to then target the highs up here and the gap. It's enough for me. Definitely a more tricky morning, but you know, if you have patience. I think the music's getting a little too loud now, potentially. I don't know why it changes to such a loud thing out of nowhere. It's like chill, then it's like yo, relax. But yeah, patience leads to you getting in position with the right opportunity. It was like 65, almost 70 points. I could have held it for longer, but I'm honestly content. Right, I just kind of jumped in and assumed that we were going to potentially go up there. I didn't mention, hey, you know, look to enter the trade, because it is a higher resistance type of environment. I did see the model that I like to use, the flagship of the community, the Razor model, and basically just executed it in there after we kind of peaked above this. And seeing that it held inside of that, I did mention that. That makes me confident, unless it breaks out of it and closes, which it didn't do. It makes me confident that we were going to target something like this gap up here and these relative equal highs. Like I said, the 50%, I would like to see it get up there, but we don't need our full target to be profitable. But yeah, patience pays off. Right? We waited all the way up till this next macro. When did my execution happen? 7:43, 7:42. Right? So a little bit before the 7:45, 7:50 beginning stage. Why did I take profit so quick too? Right? Taking the 60 points. I mean, look at what DXY is doing. I'm not comfortable. So if I get something offered to me within the logic that we talk about, you know, why not? Sell side was obviously not interesting yet. Everything was rallying higher. So trying to force a short in the face of those indications, I mean, it's a little irresponsible, don't you think? It's like seeing traffic fly by and you're like, I want to cross the street anyway. I have to get to my destination faster. What's going to happen? You're going to get steamrolled by a bus, you know? You try to do too much. You try to force things. So I said that we would only be interested in taking shorts if we got below this, and then if we swept this low. And again, that would set the stage for these to continue to remain inversions. That would make this come into play again. We have this 2-hour fair value gap. Let's see if that holds for another continued leg higher. I think it could. You know, maybe it offers another opportunity in there. It does have trendline liquidity there, so we just got to be a bit cautious. Yeah, see, it didn't operate like that. Kind of just ran up, swept it out. So now we want to see, is it going to use it as an inversion? DXY is now finding some legs. We have SMT at the highs up here. Again, we got that 1-hour fair value gap there, so see what happens, everyone. Again, we may still see that market maker sell model idea kick into play. Now that it's really aggressive. This is a balanced price range up here. So in order for it to keep going lower, it's going to have to stay below that whole delivery up there, and it shouldn't even attempt to come back into it. And then we got the trendline liquidity down there. So now we're getting back below the 50% here. Let's see how that's treated. Of course, we want to move up a little bit, see what's going on. Getting the trendline liquidity in here may end up becoming a piece of the target. Yeah, see. Now we got the inversion here. Only way that it goes back to the buy side, or is interesting to go back to the buy side, is if we can break back above that. Otherwise, this is a pretty solid characteristic showing us that it's respecting this as a balanced price range. You know, all of this may have just been a wick. I do not really like the fact that these are equal highs. I don't like shorting when there's equal highs like this. But yeah, it looks like it's pretty rapidly looking to reprice down to that trendline liquidity. They just sweep out these lows here. Okay, we got that SMT that's pretty interesting. So again, from this low to that high, if it returns up to here, it's going to go even deeper. We do have a gap up there, so it is a chance, it is a possibility. But I mean, this is just disgusting. It's nasty, right? So if you got something, there's no need to push harder, because, you know, you may get all of it taken and some. if you allow it. But let's see if this holds in here. See if this will go to the downside. We definitely want to see us stay below here. I'd like to see that act as a breakaway gap. But we'll see if we get that. Why? Because this is a balanced price range. It should act as a balanced price range if it goes lower. If it doesn't, and that gets violated, again, it's telling us that it's not interested in going lower. It's interested in breaking through to the buy side. Now, the bonds are definitely moving higher, so could cause an issue, make it harder to short, at least in a confident manner. So yeah, let's just study how this works, how this operates. We're inside the macro. It's taking buy side, accumulation, manipulation, distribution here, rebalance or potential redistribution. And if that is the case, it should blow out some of this trend line liquidity. We'll see. It looks like it's just doing a little bit of anything that it wants to do. Right? Just sideways, seek and destroy, take the buy side, take the sell side, deep retracement, all this chaotic stuff. So these are the days that you'll blow your account, just so we're clear. Guarantee you some of these live streamers, if they're live right now, they've probably blown their accounts. Or at least took some heavy losses if they feel like they have to prove something. When they could simply just chill out, be honest about the condition. You're not going to know everything at all times. And sometimes it's best to just sit on your hands. Why deal with the pain of regret by breaking the rules that are literally there to save you from hurting yourself, from making this a difficult, mentally draining, negative experience? It's made to protect you from those things. You want to love what you do. Trading's boring in its nature. It's pretty boring. I don't think it's boring. Most do, though. But, just because it's boring doesn't mean you have to make it overly exciting. It should be exciting to know that you're trying to build yourself a future. And once you learn how to, be Houdini, kind of predict where these candles are going to go, that's pretty exciting if you ask me. But you have to do it the right way to get there. And over trading, over leveraging, forcing your will in a condition like this, it's not how you get there. Being patient and waiting for your stuff to set up like we did today with this opportunity here, it's part of the right way to do it. Maybe this wasn't your model. Maybe this wasn't something you thought was rational to execute. It's okay. It just means that, it just wasn't your opportunity. Doesn't mean you missed something. Doesn't mean anything. What you probably missed, if this wasn't your opportunity, was a losing trade. If you haven't taken a trade today, you didn't miss anything except a losing trade. Because you probably would have taken a loss anywhere in here if it wasn't timed correctly. If you took an entry before a macro, outside of the macro. This is definitely a day that has probably ruined a lot of people. So yeah, again, I don't like how they left these equal highs. Could be a bit of an issue. Peek below these lows real quick. So again, if it violates these levels, gets back outside of this, we should have a pretty clear shot to run up above those highs. Yeah, so it's pumping into a lot of that. If it gets up above here, we'll probably see another pretty solid move targeting the trendline liquidity up here. We got trendline liquidity right there too. The Nasdaq is definitely the sixth sister, and correlation is still all the way up to this point a big problem. So, you know, this low to that high, again, it needs to stay below that if it was going to keep dropping, preferably not even try to get up there. Because it has, we're also above the 2 hour fair value gap. If it trades into that, we want to study and see, is it going to use that as support to then rally up? We took out liquidity here. So this was a stop raid. Kind of set equal lows though. It's kind of a stop raid, kinda. It barely breached below it, so. Yeah, the Nasdaq's had the hardest time next to the S&P. The S&P is moving up, right? It's breaking the highs. That's a pretty solid thing if it is going to continue to go higher, but I mean, I don't trust this for either thing at this point. So yeah, if I didn't take a trade when I did, I'm not interested in really taking anything. And I advise you to consider that because it's one of those days. Oh yeah, just hit 8 o'clock too. So yeah, we'll stick around for another 5 minutes, but I mean, you know, we'll probably call it a day after 5 minutes passes. Because I mean, do you really want to participate in this Wild West whipsaw chaos? It's good to experience it so you can understand, like, okay, these are days that are absolutely vicious. And if I'm not patient and know what I'm looking for, exactly what I'm looking for, and I'm at risk of over trading and over leveraging, I'm going to really hurt myself. So yeah, I guess we'll put a ribbon on it actually. It's really not much of a need to wait much longer. It's not going to really be much more. It is a macro right now, so we'll see. I mean, we got equal highs up here and equal lows, and we're in consolidation here. So who's to say, especially because correlation's been a mess, who's to say it's going to do one thing or the other with certainty? You know, there's no correlation taking place. There's no real indications aside from the fact that it's just kind of refused to go lower. I mean, this is what high resistance delivery looks like though. Deep retracements, you know, displacement that comes all the way back, sideways delivery, breaking through highs, breaking through lows, no real sustained movement. It's not really in a hurry to get anywhere. It's unfortunate though because the currencies did much better today and everything else was in alignment except the indices. And the Nasdaq was the most weak, right? The most uninterested in trying to go to the buy side or the sell side, right? It dug lower, but it kind of just hasn't really done much except chop around in a very nasty way, right? So again, if you didn't take any executions, you have a winning day because you kept yourself away, you know, from a condition that probably totally wrecked you in the past. Because this stuff isn't like rare. I mean, it happens every so often when prices kind of accumulating, or if we took a big liquidity pool, or if we're at the end of the month, which we are. If there's a news event coming the next day, or like NFP week. All these things, all these things play a role and lead to circumstances like this. If something big happens in the world, right, these are all times when this can happen. Mondays, right, because it's consolidation manipulation generally. Not all the time, but, it's definitely a characteristic of Monday. If you've taken a bunch of losses, you probably know what I mean on Mondays. And then, of course, at the end of the month, if you do journal your trades, you definitely want to go back and look at when you took the trades, what time it was, were you outside of a macro, what day was it, what part of the month was it, because the 2 middle months are the best parts of the month to trade because it's the expansion portion of the monthly range. Just like how the 2-3 middle days of a week are the best days to trade, generally because they're normally the expansion portion, right? Generally, not always, but there's never a always in trading. But if you go back and look at that stuff and think about some of these things that we've talked about today, you could probably come up with a pretty solid why behind the losses that you took. Like, why did I take a loss, right? What was happening outside of the fact that I just got it wrong, right? There's generally more factors than just the technicals overall that are leading to something like this, And when you're able to identify it, right, like we talked about, the fact that it may be a bit harder of a day to trade, we came off of a large range day, large range London session, right? That generally can also lead to stuff like this. London didn't really have the large range. It kind of did what we want to see it do. We did see the price blew past the 4th standard deviation, right? I said that could sometimes be unreliable if we're looking for like a bullish power 3 or a bearish power 3. When it blows past it, it's either not going to work out and you're going to be wrong and it's going to keep going, or it's going to, potentially end up like this, especially if there's multiple things overlapping that could lead to this type of condition. Right? So again, hopefully you guys were safe today. Hopefully you learned some stuff, maybe got some new perspective. And, just in general, hopefully you guys got value from today. And again, I appreciate all of you guys that liked the video. It really helps the channel out, shows that you appreciate this content as well, right? Yeah, with that being said, I guess I will see you guys here on YouTube on Sunday. And those of you in my private group, I will see you guys bright and early tomorrow morning. And we also have news on Wednesday, but it's a day before a holiday. So expectation for tomorrow is not going to be too crazy. Maybe it gets excited because of unemployment claims or whatever. But I'm going into tomorrow with limited expectations. I'm not going to think too crazy. We do have a small range today. So maybe something kind of opens up tomorrow. It is the day before a holiday though. So again, low probability, like automatic filter, low probability, probably high resistance. Not going to be too excited to get anywhere because smart money is on vacation probably. And the volume just kind of dies out essentially, because professionals aren't ball and chain to the market. They want to live their lives just like you should. That's why you got to know exactly what you're looking for. Do the deep study so then when you get on the chart, you're not going to have, crazy confusion and you're able to identify what the condition is. All right. Yeah, it's interesting. It's now starting to open up, huh? But yeah, so I guess I'll leave it there. Again, God bless you guys, and I'll see you guys on Sunday here on YouTube, and I'll see you guys in my private group tomorrow morning. All right, have a good rest of your day, you guys.